Well, the war in West Asia isn't just a battlefield issue. It's hitting global energy markets, food supplies and economies all over the world. Egypt's President Abdel Fattah al-Sisi warned that oil could top $200 a barrel if key facilities are targeted. But what does this mean for prices, global growth, and even what major financial players like JP Morgan are saying about the fallout? At a major energy conference in Cairo, President Abdel Fattah al-Sisi warned that attacks on energy infrastructure, whether production sites or refineries, could have severe consequences for the global economy and drive fuel prices sharply higher. Analysts now fear that oil prices could surpass $200 a barrel, a level not seen in decades, a concern Sisi described as entirely realistic.
I fear that targeting energy facilities, whether production sites or existing refineries, would have extremely serious repercussions on the global economy and fuel prices. Prices could surge dramatically. Some analysts and observers believe that if these facilities were disrupted, the price of a barrel of oil could exceed $200, and that's not an exaggeration.
Sisi also warned that rising energy costs could ripple into fertilizer markets, driving up the prices of food staples worldwide, with fertilizers used in nearly all food production disruptions, which could send global food costs even higher, hitting middle-income and fragile economies especially hard.
Rising prices would also affect fertilizers, which are involved in nearly all global food production. Food for humans. Food for 8 billion people depends on them. If these fertilizers used in producing food products and various types of food are impacted, we're talking about price increases with major consequences for economies around the world. Wealthy countries might be able to absorb this, but countries with moderate or fragile economies could face very severe impacts on their economic stability.
The International Monetary Fund, IMF, says that the conflict has caused higher prices and slower growth. And this is happening globally, with supply disruptions at the Strait of Hormuz, a choke point for roughly a quarter of the world's oil and 20% of liquefied natural gas, making this disruption one of the largest ever. Advanced economies and vulnerable nations alike are feeling the effects, with inflation pressures mounting and forecasts being revised downward. Oil prices are already climbing, with Brent crude near $116 a barrel, on track for its biggest monthly gain on record as supply fears persist and military tensions escalate. Traders eye disruptions at major choke points and attacks on tankers as catalysts for continued price volatility. And even JP Morgan, one of Wall Street's largest banks, has weighed in. Just before the war began, its analysts predicted limited long-term supply disruption and a softer oil price outlook, expecting Brent to average around $60 a barrel in 2026 and no prolonged cuts to supply. Now, that forecast is being tested as geopolitical shocks send oil sharply higher and markets reassess risk.